Let's hear from Sophie Karp, utilities analyst at KeyBanc. Sophie, last year was kind of a tale of two markets, a good first start to the year, but then the punch bowl got pulled away there sort of at the end of the third quarter into the fourth. Was that the beginning of the end of the rally for utilities, and are we in a different phase now?
Hi, thanks for having me. And yes, I think that it is the beginning of the end, and I think that utilities are expensive, right, at this juncture. The sector has performed exactly as you would expect a defensive sector to perform in a market like what we had last year. On average, the yields are expensive. The index is trading at 2.8 times premium to the S&P 500, which is very high by historical standards. And we think the reversion to the mean is inevitable here, particularly with the rates rising and the sector also being expensive compared to treasury yields and other interest rates metrics.
Are there still some selective buys in the sector that you would point us to?
Absolutely. I think what you're going to focus on in the sector right now is the unloved, under-owned names that maybe have dealt already with a bunch of overhangs and have positive near-term catalysts. For example, I think First Energy deserves a close look here. This is in a high utility. It's a company that first made significant progress resolving regulatory issues in Ohio in getting their house in order in recent years. Secondly, we expect the new CEO announcement and the sale of a minority stake in one of their assets announced in Q1 of this year, so it's pretty imminent. We expect this to be a positive catalyst for them. And lastly, it fits the bill as an unloved, under-owned value name. It trades at a discount to peers and has above-average dividend payout here, and dividend yield. So I think that's an example of a name that you want to focus on going into this type of market.
But to be clear, Sophie, someone who's sitting at home and saying, you know what, I'm a little concerned about the market this year. Let me buy a utilities ETF just to be safe. You think that would be mistaken?
I think so. I think that that trade has run its course. What we see in the market, Kelly, is that the utilities do well when the anticipation of a recession environment begin to build. We are over the hump here. The utilities have already done well. And so what we will anticipate is that the sector will revert to the mean and will trade more closely to its historical metric, which is in line with S&P 500, right?
Yeah.
As opposed to almost 3 turns premium. In fact, we have not seen such premium of utilities to S&P 500 since 2004.
Wow.
So I think if you want to buy something that's safe, and you think that's utilities, you're probably too late to this. You missed the boat on that.
Sophie, thank you. She makes a great argument, Ty. And I love people who don't come on and just always talk up the thing that they know best.
That they cover.
Own best.
Yeah.
Totally. I love it. Sophie, great information. Thank you so much. Sophie Karp.